This video is covering problem set chapter 6, problem set A, problem P6 1A only. For each of the homework problems, I'm going to do a separate video for each one of them. Let's get started into the solution of this first problem. Okay, so the problem looks like this. Pitt Limited is trying to determine the value of its ending inventory as of February 28th, 2022, the company's year end. The accountant counted everything that was in the warehouse as of February 28th, which resulted in an ending inventory of 48 grand. However, she did not know how to treat the following transactions, so she didn't record them. So we're going to go through each one of these transactions, and we're going to discuss, first of all, whether or not to include them in inventory and why, or why not. So we're going to go through all 7 of these. The first one is A, obviously. And on February 26th, Pitt shipped to a customer goods costing $800. The goods were shipped FOB shipping point, and the receiving port indicates that the customer received the goods on March 2nd. So in this case, Pitt is shipping to its customers, to one of its customers. And the goods so it's shipped to one of its customers, and the goods are FOB shipping point, and they shipped them on February 26th. So on February 26th, title to the goods converted or transferred to the customer. So Pitt doesn't own them on February 28th. So these goods would not be included in Pitt's inventory because Pitt doesn't own them anymore, because they're FOB shipping point, and they were shipped on the 26th of February. The goods should not be included in inventory as they were shipped FOB shipping point and shipped February 26th. Therefore, title of the goods transferred to the customer on February 26th. Just a little reminder. For all of these, legal title determines if an item should be included in inventory. So A is would not be included because title transferred hands on February 26th because the goods were FOB shipping point. Shipped FOB shipping point. On February 26th, goods were shipped FOB shipping point. B, on February 26th, Mauritania Inc. shipped goods to Pitt, FOB destination. The invoice was $350. The receiving port indicated that the goods were received on March 2nd. These also would not be included. Now, in this case, Pitt is the purchaser. So they will not be taking possession of the goods until the goods reach Pitt, because Pitt is the purchaser. So the good ownership of the goods does not transfer to Pitt until the goods are on Pitt's shipping dock. So these goods would also not be included in Pitt's inventory. Remember, in this case, Pitt is purchasing the goods from Maritime, and the terms are FOB destination. So Pitt would not receive ownership of the goods until the goods arrive at Pitt, which happened on March 2nd. The amount should not be included in inventory as they were shipped FOB destination and not received until March 2nd. The seller still owns the goods. That means Maritime still owns the goods. Number C, Pitt had $500 of inventory at a customer's warehouse on approval. The customer is going to let Pitt know whether it wanted the merchandise by the end of the week. These goods would be included in Pitt's inventory. Pitt still owns these goods. Title has not transferred hands because the customer is not satisfied. Legal title of the goods has not transferred to the customer until approval by the customer, because approval equals satisfaction, which is the fifth step of the ownership of the revenue recognition process. Legal title determines if an item should be included in inventory. D, Pitt also had $400 inventory at Bell's Craft Shop on consignment from Pitt. Just because something's in somebody else's possession doesn't mean ownership is transferred. Pitt still owns these goods. They're just being held by Bell. So in this case, goods would be included in Pitt's inventory. In this case, Pitt still owns and has legal title to the merchandise at the Bell Craft Shop. Legal title determines if an item should be included in inventory. Six, on February 26th, Pitt ordered goods costing $750. The goods were shipped FOB shipping point on February 27th. Pitt received the goods on March 1st. So in this case, again, Pitt is purchasing the goods, and they're not going to take ownership of the goods until February 27th. So in this case, they took ownership on February 27th. February 27th is before February 20, the end of the year. So these goods would be included in Pitt's inventory. Remember, Pitt is purchasing the goods in this case. The goods were shipped FOB shipping point to Pitt. So Pitt took ownership when the goods were shipped on February 27th. On February 28th, Pitt packaged goods and had them ready for shipping to a customer FOB destination. The invoice price was this. The cost of the goods was this. The receiver report indicates that the goods were received by the customer on March 2nd. Again, this is Pitt selling to a customer, and the terms are FOB destination. So the customer takes ownership of the goods when they reach the customer's dock. In this case, that didn't happen until March 2nd. So on February 28th, Pitt still owned the goods. These goods will be included in Pitt's inventory. Remember, Pitt is selling the goods in this case, and they are shipped FOB destination. The goods were received on March 2nd, so on March 28th, Pitt still owned the goods. And the last one, Pitt had damaged goods because they are no longer sellable. The goods would not be included in Pitt's inventory because they're not sellable anymore. They are damaged goods. So Pitt would have to write them off the cost of goods sold by debiting cost of goods sold and crediting inventory. Okay, that's the end of this first coverage of the homework assignment.